Like I said, we have Robert Deadman here in the office. I'm going to talk a little bit about Robert and kind of our experience here. I have an Michael Gill says, can you have your cousin call me? I'll have somebody call you, Michael, but Tyson actually is now programming. So I'll have one of our sales reps give you a call. John says, this is a great, this is better than attending a show. Great production. John, thanks for coming. I appreciate it. So let's talk a little bit about Robert Deadman. Robert's sitting right next to us. How you doing, Robert?
I'm doing great. How are you?
I might be a little bit tired, but I'm doing well today. We've been at it since 8 a.m., 10 Eastern. So, but I love doing these things. So I want to tell you a little bit about Robert. When I started here 22 years ago, Robert was in tech support.
Yep.
And I started in inside sales, and Robert went on to design a lot of the add-ons that we develop or that we sell here at MetaStock. In fact, one of our best-selling add-ons of all time, actually our best-selling add-on of all time, is Performance Systems Plus. He's also released Trade Oracle and T2 and a Triangles add-on. But the thing about Robert that I really like, we would sit there and negotiate different ideas around technical analysis, and that's a little bit kind of way too in the past for where we're going today. But the thing I'll tell you about Robert is he's very, very smart. And he also knows how to create a really good MetaStock add-on. So when he approached me, we ran into each other at the Traders Expo 2 or 3 years ago?
2 years ago.
2 years ago. And he wanted to put together something around Ichimoku Ichimoku Method. I said, well, that sounds like a great idea. I know you can build some terrific products. So let's have you do that. And so that's kind of the genesis of this product. It's been fairly popular. People like it. Personally, when he started creating this, I knew nothing about Ichimoku. And so I learned as soon as he had the product ready, and it's a really cool methodology. And the master method is actually the Ichimoku Master add-on is actually really, really good at kind of teaching about the Ichimoku method. So I brought him in here today to kind of talk a little bit about Ichimoku. And how do you want to do this?
We can go ahead and pull up a chart and start taking a look around. We should probably talk a little bit about the history of it, though. So the Ichimoku method was started being researched almost 80 years ago. And yeah, the picture you see on the screen, Ichimoku Sanjin, this is the guy he was I'm trying to think, what do you call it? Write articles, basically did communications, and he had started to try and do research to try and figure out if the markets in Japan could be predicted. And so what he did is he got a whole bunch of interns over the period of several years to look at charts over and over, just trying to figure out what things could be continuously repeated and duplicated, and to try and figure out some kind of methodology. And of course, this was all being done around the Japanese markets at the time. But what he ended up doing is releasing it to the public around 1968. And it was this philosophy that was pretty much only in Japan, and had remained Japanese, or in the Japanese realm, and was only brought over to the Western method of trading, or to the Western area, in the late 90s, and didn't start getting popularity until the late 2000s. Now we're in the 2010s, and it's starting to really pick up really well. But the reason I bring this up is first, this was released 50 years ago. 50 years ago this year, actually. And it still is being heavily used today. It's been able to stand the test of time. People are still using it as a regular trading methodology. And lots of groups have tried to take it and change it and say, well, it was designed for a Japanese market. Let's try and alter it for a US market. And everybody ends up resorting back to the original rules because they're that stable. And that's really one of the best things about the Ichimoku method, is it's something that's stable. It doesn't seem to wear out. So it's really kind of a great history on that. So in the case of Ichimoku Master, the reason it was made is because even though these rules are stable, there's a lot of them, and a lot of times the charts, dealing around Ichimoku charts, can be rather daunting to try and learn and understand and follow, and certainly difficult for looking at past signals and past behaviors, because it works on a process of looking forward in the chart, looking back in the chart, looking not just at what's going on today, but looking at what has happened and what's expected to happen. And so, we're going to switch chairs? Or
if you want. Yeah, sure.
Okay, so, and with all the indicators that are there, they can often, like I said, be rather confusing to take a look at. So what Ichimoku Master has done is tried to take all of those indicators and do the interpretation, or at least the analysis, that follows the original Ichimoku method. Now, there's lots of Ichimoku variations that other people have come up with, but this right here specifically follows the traditional one. So if we can, let's see, we go ahead and grab a MetaStock over here for this, or
MetaStock, if you want, it is right
here
in the background.
Let's go ahead and grab that. Or no, let's actually, do we have the icon?
Yeah, it's right here.
How do we get that?
Should just drag over.
Just
it's
a moment.
Behind all the questions.
All the questions.
Yeah, those like to stay in the front. Okay.
We're going to go ahead and pull up a chart here that shows kind of what Ichimoku is doing, the Ichimoku concept.
This is a MetaStock Zenith chart, in case you're confused.
Yeah, this is not the MetaStock, but it is, or the MetaStock software, but yeah, Zenith. And we are using this one because it does show how Ichimoku is often displayed on a chart. And there's 4 general indicators. There's technically 5, but this large one here is made up of 2 of them. So what we're going to do is, first thing we're going to look at is this green indicator right here. This is called a Tankinson indicator. Now, it's a really simple indicator. What it basically is it shows you the midpoint of prices that have occurred over the last 9 periods. And you'll notice that it kind of has a lot of the behaviors of a moving average, but it is not a moving average. Now, Ichimoku method is a trend following system, the same way that general moving averages are, but they do use a different process by using these midpoints instead of by using these closing prices. And it's not midpoints of a specific bar, but a midpoint of groups of them. So in this case, this is the midpoint of the last 9 bars that have traded. And as you can see, as this moves up and we have the 9 bars kicking off, this quickly moves up with it. This is what we use as our following point, our initial aspect for the Ichimoku method. But it's followed up by this bar, or this indicator down here. This is known as the Kijinsen. Now this right here is the same indicator as this Tankinson, except instead of it being the midpoint of 9 bars, it's the midpoint of 26 bars. Because of that, it follows a lot slower than what the Tankinson is doing. But you'll also notice that it does keep that distance the way how it would come up and break up, unlike a moving average, which would tie very closely up here. So these 2 indicators are the first part of what defines the Ichimoku method and concept. And in a regular moving average, you work with crossovers typically, and this is not necessarily different than that, at least not for these 2 indicators. The general idea is that when the Tankinson is above the Kijinsen, that would be your perspective to be going long, and when it crosses below, that would be a concept of short. It's a little bit more extensive than that, and we use other indicators to extend that. We're going to do that now as we show you when we actually would use that. The next part of these indicators right here, and this right here, we have a top part of this. This is made out of what's called a Chiku Span A, and a bottom part that's called the Chiku Span B. And together, this makes basically what's known as the cloud, or the Ichimoku Cloud, or the Kumo. Now, Kumo is just Japanese for cloud. a lot of times people will say the Kumo cloud. That's kind of like saying cloud. And I'll be honest, there's a chance I'm probably going to do that during this webinar. I'll try not to, but it really is referring to the same thing here. Now these indicators, I'm not necessarily going to worry about what calculates them. We do release all of that information in the manual, but I'm going to explain what they're doing. As you'll see that they're, first, they widen out against each other and then they come close to each other. So this right here is supposed to represent, in Ichimoku method, a concept of equilibrium. This is the place where prices are trying to resort back to. And because of that, they can actually have a wide concept of equilibrium, as well as a very thin, small part of that. And that's why these get larger and smaller. But one of the other important parts is that it also lets you see what's going on, the expectation of that equilibrium in the future. What defines an equilibrium point as time moves on? So if we're looking at this chart here, we'll notice that this equilibrium point here is where it's expected for these prices to try and move towards. They can always go above or below, and those would be breakouts from it. But that's where the pull is to try and resort back to. One of the nice things, though, is that we want to pay attention to which one is above the other. So if you notice how this one is red, and this one right here is yellow, or orange and yellow, it's because the Chiku Span A is above the Chiku Span B in this one, and it's below the Chiku Span B in this one. That gives us an idea of what the future is expecting to try and direct towards. So even though this is an equilibrium point, we see that there's still a pressure to be going towards an upward momentum here. Now, how does this tie in with these two indicators? Well, it's very simple. If you're looking for that crossover to occur for the Tankinson to be above the Kijin-sen, you want to do it when the prices are outside of the cloud. In this case, if you're looking for the Tankinson to be above the Kijin-sen, you also want it to be above the cloud. It's really that simple in a lot of these cases. And from that, you could then look for when it crosses below, like here, to go ahead and get out, and then to try and stay back in. But you want to make sure that where those crossings are occurring, or when the price is one above the other, that they're occurring outside of this cloud. As long as the prices start coming back within the cloud, you kind of don't want to be trading, because it's trying to pull back to that equilibrium point. But once it goes ahead and goes beyond that cloud, then you're looking for that Tankinson to be above the Kijin and follow along with its movements from there. Now there's one other indicator that fits in with this, and this one is this part back here. This is what's known as a Chiku Span, okay? It's a very simple indicator. It's the current price 26 periods ago. That's it. It seems like, what would be the point of that? But it's actually really useful because it lets you see where the current price is in reference to where it was 26 periods ago. So in this case, we can see that the current price here, which is the same value as there, is above where it was 26 periods ago. And because of that, we can see that that still is supporting that upward pressure, that it still has upward momentum. But if we were to find that the price now is hovering in the same range as where it was 26 years ago, that's really kind of a situation where it's run out of steam and saying it's not in a position to do anything. It really is not showing its ability to have any momentum. It might be fluctuating around, but it's fluctuating around this new central point. So that becomes a very important indicator. Now, many people who trade Ichimoku think that this is the most important indicator of all. I personally think they are all equally important, but you will have certain experts who will claim that the Chiku Span is the predominant indicator to be paying attention to. But the reality is all five of them are important. Like I said, these representing 2 in the cloud. And you can see because of that, it's got forward-looking activity over here, it's got backward-looking activity over here, and it's got the central-looking activity over here. So it's trying to take a distance view as to what's actually going on and how it looks. Now, this is like the basic concept of what we have for Ichimoku. So now we kind of want to move over to MetaStock and let you see how it looks like in a MetaStock product. Okay, so we still have the Adrian Mance part up. We're going to go ahead and remove that. And we're going to do, I believe we have an Ichimoku template here, correct?
Yes.
We'll go ahead and do, I believe it's this one. Okay. And we're also going to go ahead and attach the Ichimoku expert, the basic one. And
you can do the full, it does not. The full is not, doesn't slow down at all.
Okay. Excuse me. So anyways, now we're looking at a chart from the Ichimoku Master using the Ichimoku Master template and basically an expert advisor. Now, you'll notice that this does look a little bit different. One of the things is we can't actually see that cloud moving out to the future. There is a problem in MetaStock that it doesn't point past the end, but the way we've gotten around that is we have created the cloud as an extension up here. So we'll show you the closing price up here and then show you where the cloud is referenced the 26 periods forward. So that way, even though normally you wouldn't be able to see it, we've provided a way that you can see what that cloud is doing very easily. Now, in looking at this, one of the things I said was one of the problems is how do you look at past information? And if we go back here, just to any of these places, looking at it, we can see that it can become very confusing because if we're trying to see what the future is, at what point does this right here occur? Does it occur around here, around here? We're not really sure, and we want to be counting bars to try and figure out where the 26th bar is forward to see what the cloud looks like. The same point is we'd also want to count 26 bars back to see what the Chiku Span is doing, because our natural inclination is to assume that the bar we're looking on here, that this is the Chiku Span we're looking at and that this is the exclusive cloud that we're looking at. But it doesn't really work that way. So one of the problems with Ichimoku is that looking at it historically is often very difficult to interpret. The way how we've solved that is we've created this Ichimoku master that's job is to go and analyze and look at these charts and look at these indicators and figure out what all these indicators are doing in their correct references. So if I'm looking at this bar right here, I'm looking at the cloud up here, the cloud here, the Tankinson and Kaijisen here, and as well as the Chiku Span back here. The package already knows how to do this. And because of that, it can quickly look and see what the status is of each of those indicators as to what kind of behavior could be expected or planned on because of them. And that's where we get this expert advisor over here that shows you this information about what's going on at any point in time. If you'll notice, like if I click over here, I'll change where the bar is, and you'll see that the expert advisor changes as well as any signals that could be existing with it. And this allows you to really quickly look and see what Ichimoku is doing without actually doing an analysis, an in-depth analysis yourself. It basically is showing you the main signals that occur with Ichimoku, whether they're bullish or bearish or neutral. In general, neutral signals are typically avoided, but it will let you know whether things should be avoided or not. So for example, if prices are inside of the cloud, if we come back to some place like this, we'll see, for example, the price-Kumo relationship is neutral, and so it doesn't recommend an entry. It lets you know the trade entry is not recommended. Regardless of what any of the other signals are, you probably shouldn't be getting involved because of where it's at. But allows it to take all of those signals and very quickly show you which ones are bullish, which ones are bearish, and which ones you want to be paying attention to. And it does that on the fly, going back and forth, so that you can learn to get used to the Ichimoku method. Along with that, it lets you know where those support and resistance values are based upon the Kaijin acting as a support or resistance, as well as the Senku Span A and B acting as support and resistance, depending on what they are at the time. Now, here's another great part. I mean, you can sit here and say, well, okay, great. I'm just kind of seeing the signals you're telling me, but I still don't really understand what's going on. So what we've done here in this is we've created the explanations as to what's actually happening inside of this expert advisor and on this chart. And we actually have 3 different expert advisors to come along with this. And the reason why is because they all give different information. Well, it's actually the same information, but you'll have less information if it's if you want to have less things given to you. And I'll show you that here in a moment. So this right here is the complete version. This one right here has everything in it. When you're just starting out, if you're not very familiar with the Ichimoku method, then what it does on every one of these bars is it has some information. This right here will be the same across all the bars because it explains to you what the signal is. And you'll notice in the black, all of those are explaining those signals. So those are going to be static on everything. Those will not change. However, what will change is this part here in blue. This is specifically an analysis for this bar that's occurring right now for what that signal is doing. We've done that for all of these, and from that you can take a look and learn what the signals are meant to mean, why they're there and what they represent, and how they should be interpreted. So we're making sure that Ichimoku Master isn't just doing the interpretation, but it's teaching you at the same time what those interpretations mean, what the actual chart is doing and how to be trading it. Now, eventually you're going to come to a point once you're using this as you're working over time that you've read these black parts enough and you don't really need to see them. You understand what the signal is. You just need more help on the interpretation of the current bar signal. Well, because of that, we actually have another expert that goes ahead and takes away the things that you already know and will leave just the blue parts so that you don't have to be encumbered by all of the same repeating things anymore. So as you get better and better, you can just look at the chart interpretations and see what's changing on each time. And you'll see that they actually do change as you get different information on different bars. So this right here helps to make it cleaner as you get better and better. Now, what happens if you're to the point that I really don't even need this either? I've really got the feel factor down. I really get what's going on. I just need to see what the signals are doing. Well, because of that, we also have a minimal version that you can then finally end up using. And all it has is the basic information. It lets you know what the signals are and what their directions are representing, bullish or bearish. And it allows you to very quickly see what's happening, so you know how to be looking at it, including with recommendations for stops, depending upon whether you're looking at keeping something really tight or keeping it far away, depending on how much you want to be in it or not. Now, the great thing also about this is it does work on all chart types. So a lot of people are going to be using it, obviously, with stocks, which is what it was originally designed for. And it still works with the U.S. stock market just as well as it did with the Japanese stock market, even though they were very different. And one of the reasons how they're different is that the Japanese stock market traded on a 6th day. So it was a 6-day trading, not a 5-day trading. And because of that, that's the reason why things like the Tankinson is 9 periods. It's because it's meant for a week and a half. And the Kaijin-sen is 26 periods because that was 4 weeks in trading. We don't have those same days, but the indicator lengths seem to still tie in with those. And so, like I said, this right here allows for that very quick interpretation that gives you what's going on any chart at any time. And like I said, helps you to understand it. So those are the basic concepts. One of the questions we do have that is coming through is, does Ichimoku Master work with Forex? And yes, it does. I personally use it with Forex. That is what I myself do. I'm not as much of a stock trader anymore as much as I used to. And like I said, I am a Forex trader myself. And Ichimoku Master does definitely work with that. And it works even better if you're working with like the US yen. It's really great for that. So that's one of my more favorites to work with because it works better on things that are highly trended. So since it is a trend following system, the more trend activity there is, the better it operates. And the US yen does seem to be a very trendy kind of a product. So I like to use it there. And in real time, I actually like to use it on 1 hour charts more than I do on daily charts. So it does work on multiple time frames. I wouldn't personally recommend using it down on the 5-minute level, especially if you're dealing with Forex, just because the movements are often not enough to justify the cost of the spread. But again, that's my way of trading, and you can choose your own way of actually your trading conditions, what your brokers will charge to figure out what's the best time frame to work for you. But it does work on all time frames, or I'm generally in all time frames, certainly down into the hour charts and up through the dailies and into weeklies. And actually what a lot of people will do, which is following the general concept of the method, is that they'll look at the Ichimoku chart on multiple time frames to make sure that they're all going in the same direction and talking about the same thing, or at least representing the same kind of action.
Do you want to put up a JPY chart?
I'm sorry, what?
Do you want to put up a Japanese chart?
Yeah, well, if you want to grab one,
Yeah.
so we can go ahead and do that. Yeah,
we're going to look at JPY for you, Kenneth.
That doesn't good.
Not necessarily. I am online, right? Yes. Okay. Let's go ahead and go into the Forex list here. I might have the symbol wrong. Shows you how often I look at Forex. So we do have the Forex, and we'll just go into the major pairs. We won't open up all of them. Let's just go ahead and look at and I believe it is JPY equals.
Mm-hmm.
Okay, let's go ahead and load that up. Okay. Oh, and you know what I needed to do is apply the template. I should have just opened it up with the template, but not a big deal. Let's just go ahead and find it in this list. Okay. Apply. Didn't it crash? All right, MetaStock got tired, I think. And I think probably what that was, we'll go ahead and reload the chart. But
I've not seen it do that.
No, it doesn't. The reason it did that is actually we were doing some development work with, and it was using an unstable DLL.
Oh, okay. So, I was going to say that shouldn't be the Ichimoku DLL.
No. We're always working on something,
Okay. Well, while we're loading that up, I'll go ahead and talk a little bit about another component here. So one of the things that is really nice about the Ichimoku Master versus some of the other things is the ability to do those explorations and how they will work. The Explorer in MetaStock, which I think Jeff has probably shown a couple times today, but he'll go ahead and show it again in a little bit with the Ichimoku Master. It goes through and allows you to, instead of having to look at all those indicators and look at all of the parts in the expert advisor, instead of showing you or having to pull up the expert advisor for every chart you want to look at, a lot of times you just don't know which chart you want to look at. And so what you're wanting to do is you want to just have MetaStock find what signals are working the way I want, which ones are having the breakouts, which ones are outside of the cloud and have the Tankinson above the Kijun-sen and are working the way I want. It's like, tell me what it's doing. And so we actually have that available. But it looks like we're going to go ahead and get that Forex chart up here. Okay, and so here we are looking at the Forex as what was being asked about. And we're going to go ahead and zoom out a little bit. And so as you can see, the prices here are going up, and we have this price here representing the close, and this right here is the Kumo being represented here. And this is really an interesting thing because we see that here it's all trading within the cloud, and here we've got it coming out. Here we have it coming out too, and only at that same point recently do we actually have this part breaking out as well for what's going on. So it does let us know that this is a really good spot for a breakout towards a trend. And as you'll look at this, you'll actually see what I meant by that there is some really good trending action when it comes in with the Japanese yen. when we have it breaking down here for short trades, and then we don't trade at all because we're here in this area. When we come in here, we can, like I said, kind of get some movements, but then we start really getting some great things. And depending upon how much is going on, since you can choose your own stops, I will often, when it's getting to be really, really shaky, is I'll use the Tankinson as my stop. But I'm also waiting for it to pull away enough for it to really get involved in this market too. I personally do not just jump on just because it's gotten out. I wait for it to pull away from the cloud a little bit before I get in on it. So, like I said, if we take a look at this here, you can see that it definitely does have, like I said, the same type of commentary actions here. I'll just go ahead and put on the minimal one, so we can go ahead and take that look, or take a look at that again. And oh, did it not attach it? Nope, didn't. Just a moment. There we go. And then if we look at that commentary, we can see it's going ahead and giving us all the same information that we wanted about the Japanese yen. Which parts are bullish, which parts are bearish. Yes, it shows that the current Kumo direction is bearish, but we'll see, like, for example, a future Kumo correction or direction is bullish. So it's letting us know what those behaviors are to take in this case. Was there another question on that? What was it?
Let's see. So John asks, is the thickness of the Kumo related to the volatility, much like Bollinger?
It is, but not in the same way that it is for Bollinger. Because the Kumo is also a forward-looking indicator. So because of that, with that, it's showing you what kind of activity has been occurring in the past at the time when your prices are going over it. So the Kumo is primarily used to look at direction, but also to show you the equilibrium where it's coming to. So when it gets wide, that may be because of more volatility, but at the same point, it's also letting you know that as it moves into that area, that it should start to be left alone and wait for it to start to have actual breakouts. Now, that being said, you will often get these widening out as trends are starting to take place. And that makes sense because the top part of the indicator, or the shorter part of the indicator, is faster than the longer part, which would go ahead and break it apart and make it extend out. But then as you start consolidating, going flat, then of course the cloud does start to narrow. But it's not the same way the band would be, where it would be showing a breakout from a localized central point, because this is meant to be kind of a forward-looking indicator. I'm hoping I was able to answer that sufficiently.
Yeah, and I can restate it.
Okay.
And then Robert can disagree with the way I restated it, which is generally how this works. But generally, as a trend develops more, like you'll see right here, and I think I'll zoom in on it just so I can kind of, right here we have a bit of a flat area, and you can see that the bands get really, really flat. But as that trend starts to establish, you'll see right here, your forward-looking bands particularly are going to expand rather out to reflect that. And I read this in the Investopedia article that I was reading about Ichimoku when I was learning about it. But you can treat this Kumo almost as like support and resistance. And the other thing that it said, and I think you disagreed with me on this last time, so you can disagree with me again, but it said the bigger the distance between the top of the cloud and the bottom of the cloud, the stronger that support and resistance was likely to be.
Yeah, I'm not necessarily sure that I agree that it should be a stronger support and resistance, because again, with it being an equilibrium point, as it gets wider, eventually the prices are going to want to pull back into it. And so it gives it more incentive to actually push through into that and then create a support and resistance once it's in the cloud. So like I said, so I would say I certainly extent agree with that, but otherwise I don't. But that doesn't mean that it's necessarily wrong. I mean, again, people create their own interpretations based on what they're looking at. And as you trade, you'll come up with your own evaluations and your own observations as to what's going on.
Caleb asked what the settings are. I think you have that in the expert, right?
Yeah, and we do have that. Now, it's not necessarily shown, I think, on this one here. I believe it's on the full version. So if we go back to the complete, we take a look at that, we're displaying the actual information here. Now there's the MetaStock settings, and then there's the regular settings. And like I said, they're typically 26 or 9, 26, and 52 periods. The Chiku Span and the horizontal shift that we use when applying the indicators is actually one more, and that's just because of the way how MetaStock typically represents it. The forward-looking and back-looking with one additional. But this right here puts it back into line with the general 26. So yes, we do have those available for using the indicators that you have that are built in. And you can go ahead and, like I said, see how they work. So from that, I was going to show about the Explorer. So do you want to go ahead and set up an exploration and let them see what's going on?
And I think I might kind of just go through some of the rules again.
Absolutely.
Just so, one of the things about Robert is he has a much better technical expertise than I do. But I kind of want to just go through this because I think a lot of people, when you throw up this display of the Ichimoku, they get a little bit nervous.
Overwhelmed.
Because there's a lot of information that are there.
Yeah.
But primarily when you're looking at entry signals, you're only really looking at these arrows that appear on the chart. And there's two reasons, right, Robert, that will appear in the chart. Two
parts that are really the key parts to pay attention to more than all the others.
Now, the first major signal you're going to get is if it comes from, in this case, up above the cloud and then closes down below the cloud. Now, by it, I specifically am referring to price.
To price.
Yeah, if price comes down and it closes, that's what they call a Kumo cross.
If it's crossing above or below the Kumo, correct. So
that's a major signal. You'll notice right here we've got the below the Kumo. As long as it's trading below the Kumo, you're going to take this as a bearish opportunity. In other words,
you're going to be looking for bearish signals.
Yeah, you're not going to go long when it's above. You're not going to go long when it's below the Kumo. And that's why we actually state this on the chart for you. So as soon as it crosses up above the Kumo like it does right here, then you're going to get that initial entry signal, and it's going to start to say, well, you can start to take long signals. So this is just a good way to visualize that. When it's up above the Kumo, you're allowed to go long. When it's down below the Kumo, you're allowed to go short. Your main entry signals, there's going to be two. The price comes from up above the Kumo to down below. That's going to be called a Kumo cross entry. The other is when the Tankinson, or this red line here, crosses down below that Kijutsen, or the TK cross.
The TK cross, right. The Tankinson is going above or below the Kaijin-sen. And so, because that's, Tenkin Kaijin cross, so TK.
So those are the only two things you're looking at to get in or out.
If you're looking at the bare basics. But a lot of times, like I said, you'll want to be looking around of what other information is going on. So for
the rest of the data is confirmation.
Really, yeah, because you want to know, like, well, sure, I might have something that gives me two signals. One of them's, or both of them are going bearish. But if my future Kumo's pointing up while I've got two bearish signals, I may go ahead and trade that, but I may want to sit here and say, I may want to hold on until my future Kumo direction is also going along with it. Because that's one that I use a lot too, is that.
So this signal right here is a pretty good example. We've got that bullish signal. This has happened because of the cloud cross, I think. Or is it the TK cross? I can't really see.
No, the signals you get is because of the TK cross going up.
Okay.
And so.
But if we're looking here, it's kind of a mixed picture. We've got a bullish, bearish, bearish, bullish, bullish, bearish.
Yeah, and that's kind of all over the place. So.
Whereas if we're looking at the signal right here, let's see what that looks like. This is obviously a short signal, but you're getting bearish, 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 neutral, bearish, bearish. So by kind of factoring in all of these different scenarios or criteria, it's going to basically kind of give you, and obviously this was a much better idea than going long right here 2 days ago.
Yeah, and one of the things though it's also letting you know is that something that you don't necessarily pay attention to is where is this Kumo in relationship to it, where's the Chiku Span in relationship to it. And so it lets you know that at the point where it suddenly goes out of it, that's really the point you want to be looking at. So for example, if we're taking this back, we can see the Chiku Span in relation to the Kumo is still hanging around in there. And as soon as you wait for the next day to come along, Now it's become bearish, so that's really the point that you want to be looking at. You can take the trade still within here, but it lets you know that even though you can take the trade, it's not necessarily recommended until this other condition here occurs. And then, of course, it still goes ahead and takes it down and continues on.
John says, I've seen traders use only the Kumo with an 8 and a 20 SMA. Any comment on eliminating the Ichis?
Not necessarily. I don't, because again, this was made for the purpose of representing the true Ichimoku method as it was released back in 1968 to the public. And because, like I said, so many people have just really fallen in love with this specific method, that's the reason why we did it. So it really is fixed to the traditional rules as opposed to some modifications that other groups have come up with. And people do, like they come up with their own modifications, but a lot of them really also, even in trying to modify, come back to the traditionals. But yeah, we don't have a way for actually changing it to go into those other things. And I'll be honest, I have not necessarily worked with those other types of rules, so I can't really comment too much on them.
I know there's a lot of classes that are out there in the market where they teach you how to just trade when the Ichimoku Cloud crosses, and that's primarily the signals that you use. And those courses can be fairly expensive. The thing I like about this product is that you can do that with this program, but it'll also kind of teach you the other concepts, as it is down here where it's kind of giving you the detailed information. And but if you wanted to use it that way, well, I'd give you the advice I give everybody: play with it, see how it works, and then implement it if it does, right?
Mm-hmm.
So let's see. Can you do a backtest performance? Yes, you can. You can test them. Now, Robert is going to give you some advice on that because I saw him wanting to chime in.
That's fine. We do provide some of the testing, but one of the problems with the Ichimoku methodology is that while it was really clear for defining entries, it had a certain amount of ambiguity when coming up with exits. And you'll find that when you're trading, you might see when the price pulls away from the cloud really heavily, you might want a tighter stop like the Tankinson. But when it's not really pushing away too far, you might want to use the top of the cloud, something that's a little bit more stable and giving it time to ramp up to speed. And one of the problems we have is that, those really do have a certain amount of ambiguity and really are dependent upon your time in the trade and the way how the trade's folding out. So while we do have system testing for the actual entries, they're not necessarily consistent because they're all based upon fixed exits that you wouldn't necessarily trade for real. You can run them, but again, like I said, I wouldn't necessarily say rely upon those system tests because they're not going to trade the way that you are. They may enter the way you may enter, but they're not going to realistically exit the way that you would exit. And much of that is what determines whether you're going to be profitable or not. So I hope that we were able to answer that question on that.
TJ Monkey says, Ichimoku drives me nuts.
Okay.
I think he means nuts in a good way. But
hopefully, I don't know.
All right. Let's run through a scan. Let's look at some charts. If you guys have questions, let us know. Really what I would reiterate about this is once you kind of understand what the indicators are doing, it's a very straightforward strategy. The thing is getting familiar with the indicators, and that's why I think this is so helpful, because it's spelling everything out for you. So we're going to go ahead and run a scan here. I'm going to show you how it works. We just ran one. You guys all know probably by now how to set up an Ichimoku, but we want to show you how to read it. And maybe we'll look at a couple of charts and Robert can give us an idea of how they look to him anyway. And again, it's not a recommendation to buy or sell exchange traded instruments, yada, yada, yada. But let's look at, we can kind of go through kind of the analysis process Robert would look at.
Yeah, because you will develop your own aspects when working with this. It's just the way it's going to happen.
We're going to run, we're going to run Ichimoku signals. We're going to run it against, let's just do the S&P 500 so it's quick. And again, you can run this. Ooh, it's not going to be quick if I run 3 of them. That's okay. We can look at this one while the other 2 run. I thought I had unchecked those other two, but in any case. Now, while this scan's running, basically we're feeding it through the S&P 500, and it's going to come back with all of the signals that had either a main entry long, a re-entry long, a short entry, or a short re-entry.
Mm-hmm.
So, and then it's going to score each one of them. So you'll get based on that score mechanism that you can see right here, the bearish bullish orientation, it's actually going to give us a subtotal of that. So, and it's running a little bit slow.
I was wondering about this. Is it running all three of them?
No, not right now, but I'm forcing more records into the scan than I need to.
Okay.
So that's why.
Yeah, okay. So it's trying to do it on everything. So yeah, if you're just putting in, 250 records, that's fine. But yeah, we can let this finish. We're already half done.
I'm also it is on the local data. So that must be it, as I'm just loading in more records than are required. You'll notice already it's rejecting 88% of the stocks. So we're going to be looking at a list of 12% of whatever we throw at this, and then picking our favorite from that 12%. And I think that's a really good way to save time.
It is, because, and the nice thing is that, like I said, through the Explorer, you can sort those signals the way that you want. So you can look at only the things that really matter the most to you.
A couple more questions are coming in, which is good because I have the options set wrong on this, and it's taking longer than it should. But Caleb asks, is it advisable to trade a 5-minute chart?
That's up to you. I personally think 5-minute charts are too the cost of entry and exit and getting in and out are often not great. I think that the spreads that occur from stuff are really large, but again, that's a me thing, and you can do what you want. But to me, I don't do 5-minute charts with it, and I think I've seen other people who have stated on 5-minute charts that they just don't get the volatility that you really are looking for a lot of trend-based trading. That would be more like a swing trading thing, but trend trading doesn't necessarily work great at 5 minutes. But I could be wrong on that. I personally, however, don't have that. I don't do that myself.
Okay.
So
we've got the scan back. Let me go ahead and send this real quick. Caleb says, how do I get the MetaStock app? I'll be specific. This is not an app. so this is more like it's not an app you can run on your phone, just like you can't run Photoshop on your phone. It's an installed toolbox that you run. And so to get set up with it, give us a call, 800-882-3040 or www.metastock.com/saleschat. And thank you for your interest, Caleb. I appreciate that question.
All right, so here we've got the results from the Explorer. And this shows basically what it does is it shows you the same information that we are looking at over here in this Expert Advisor, but it's showing it for all the stocks just running down the list. And it's only bringing up ones that really matter to us the most. So here we have, for example, we'll see that the signal is done as a 2, 1, -1, and -2, and that lets us know whether the signal itself is a long or short signal, okay, whether we're looking for a main entry long or re-entry long, and like I said, the negative numbers would be for shorts. And then this gives us information about that, basically whether it's a TK cross. Now, in the case we can see these things where we have a 1, a -1, a 3, we could -2, and it's very simple. If it's a positive number, then it's going to be bullish. But there's going to be a different number of the strength depending upon whether the cross occurred below the Kumo, in the Kumo, or above the Kumo. So if you have a TK cross that's bearish, or I should say bullish, it could occur in either one. So right here where we see that this is just a 1, then that lets us know that it was a bullish cross, but it occurred below the Kumo. Here we see this is a 3, so this is also a bullish cross because it's positive, but it was above, the cross occurred above the Kumo. Okay, we can see that this right here is a -2, so that means that the TK cross was bearish, but it occurred inside the Kumo because it's between the 1 and the 3, and those are those extremes. And so, like I said, if it's a negative, then that would basically be bearish above the Kumo, and a -3 would be bearish below the Kumo. So it does it according to where it is in reference to that cross, and its reference to the Kumo. So after we look at those things, you see that we had all those other bullish and bearish over here. We have the same kind of thing over here, except in this case it's being done as ones and -1s. And it lets us know very quickly whether like each column is going to be bullish or bearish. So this right here is the cross reference to the Kumo. All of these are bullish. We could change those and sort by bearish. We can look at the current Kumo direction to be bullish or bearish. So we can see very quickly what it is. But what we've also done to make it a little bit easier when you're just trying to get a general idea is we've created this score that puts all of these together. And so from this, we can have scores. If we go ahead and sort, we can look for ones that are strong bullish signals. Everything's in the same direction. And as we can see, that goes down 5, 4, 3. As we start losing some of them become bearish, versus bullish. So we still are a 3, so we're still bullish, but we're not as strongly bullish as we could be, say, against a 6 or a 5. The same way how this goes negative, we can quickly choose which ones are going to be our strongest entry signals, whether they be bullish or bearish. And so that gives us a really fast way to take a look at things that we want to look at deeper. We want to open it up and see what is it they're looking like, whether we really want to get involved with them. And so that's where this it becomes a really, really great thing for running through and finding those for you instead of you having to look at each chart. So
now, what kind of scores do you particularly recommend if I'm looking for a bullish entry?
Now, the general assumption is everybody's looking for a score of 6. I like to start at about 4 because before something becomes a 6, it has to be a 4 as it moves up to a 5 and then to a 6.
Sure.
And so I'm looking for things to actually get in where they've got to have the main 2 signals. Absolutely, that I've got to have my TK in the right direction and my price to Kumo in the same direction. And as long as I'm looking at those and they're, in the price or in the same area, the other things I just like to look at and see what am I feeling. So for example, my current Kumo direction is not as important to me as my future Kumo direction. So I'm willing to ignore some of the current Kumo values, in favor for the future Kumo. So that's just one of the things. So in that case, I'm fine to go with a 5 on that. While I care about the Chiku Span in relation to price, I'm not as concerned about my Chiku Span in relation to Kumo. And again, that's my way of trading. So therefore, that now brings it down to a potential of only a rank of 4. And so that's why I usually look at 4s. Now, I still want them to be the indicators I want, but I'm still looking for just that general rank to decide whether I want to look at that further or not.
Okay, so here's some 4s.
Mm-hmm. A bunch of 4s.
Shall we open up some charts?
Sure.
Okay, let's do that.
Mm-hmm.
Open.
So one of the things, like I said, you'll notice here, but before you do that, this is what I was looking at. If you'll notice right here, we see this one right here is a 4, but we see that this one right here is saying the current Kumo is a -1. Because of that, I would still look at this because that's not as much of a killer, of a deal killer for me.
Do you see anything that is a deal killer in here? Because we can not open it.
Well, if I'm sitting here looking at this to be a +4, but my future Kumo is a -1, I'm probably not going to look at it.
All right.
Okay, so I'm
out of there.
I'm not going to take that one, and I'm not going to take that one. So I'm going to go ahead and reduce or I should say, let's get rid of that to that. Okay. So those are some of the first things I'm going to be looking at.
So we've taken 500 stocks, and now we're looking at 4.
Just for these ones right here, correct? Because these ones, so that part doesn't necessarily concern me. My Chiku Span to price is still kind of important, and since those are the ones that are negative, I probably wouldn't look too much at those either. Okay. So just quickly, I'm going to go ahead and grab those 2, and we'll just take a look and see what those look like.
McDonald's and Cardinal Health. Not a recommendation to buy.
Right, this is not that at all. All right, so we'll go ahead and attach and look at this. So, and I'm going to go ahead and do the minimal one, just for what we're looking at here. So here we see that this is representing the same things that we're looking at, bullish, bullish, the one bearish, which was the current Kumo direction. Again, something I'm not as concerned with versus the future Kumo direction. So here, this Kumo was showing it to be bearish. But if we look up here where the price would be ending and it's going forward, it is running into a bullish thing. Okay, so as I'm looking out here, looking at this aspect here, this is something that I am very much thinking I would pay attention to if it were me. Now, because of this, and this is again the way how I would look at it, I would be looking at this Kaijin-sen being really tight here. So while I may consider this something that I want to get in, I don't necessarily want to use this as a stop, and I might be looking at this as my stop loss. And because of that, that's also going to determine how many shares I want to trade. If I'm only wanting to invest $5,000, $5,000 or $10,000, I would go ahead and adjust to how many shares that would equate out to with that risk. So looking at this one right here, this actually does not look too bad for my style. I think it's got a nice breakout there. It's coming up. It's got nice future direction. It's had some good downs, which is great. It has showing some aspects of trending. I'm okay with this one if I were to look at that. So I probably want to see evidence of a little bit bigger pull, or a push in the direction, but this is not a bad one for me. And then we had the other one, which was the McDonald's. So I guess we want to do that and do the commentary. Yeah. So as we look at this one, we see that same kind of information is going on, okay? We just barely had the cross that succeeded there, and the price is above. Now, as we pull back and look at this, okay, there's things to consider here, okay? And this could be one that I would look at. One of the things is, like I said, this is a trend following system. And so while this immediate part looks really good, the way how this is moving up and down is telling me personally this is not a great trender.
It's an ugly stock.
It's an ugly stock, yes. It's kind of just going back. It's got these little intermediate trends, but then they just kind of flop all over the place. So while the signal itself may look conceptually good, that's not necessarily something I would be getting into, because looking at this, it has a tendency to really take big jumps in directions. And the thing is that with this signal right here, my stop loss is really far away. And for all the recommendations that I would have here, that's a jump away from where I'd like to be based upon what this is doing. This could be pounded out really fast by looking at these other bars. Now, again, just to be really clear, this is a me thing in the way how I want to trade it based on my risk, my tolerance.
You don't like to trade sideways stocks?
I'm not a big fan of it. Again, if I'm in a trend following system, I want to trade a trend, not just a breakout for the sake of a breakout. So those are some of the ways how I would look at it, just on the results that we just came up with. Like I said, I'm not recommending to buy any things, and again, I wouldn't necessarily be getting into either one of these things. I'm more of a Forex trader, so I'm more on the Forex side myself. But that is certainly my interpretation, just by looking at it very quickly.
All right, we're going to do one more chart.
Okay.
Eric gave us like 4 symbols. We'll just do one of them because we're desperately out of time.
Yes, throw one out.
So SQ is what the one he sent. Let's go ahead and see if that pulls up a square. And he just wants to know trend versus chopper. This one.
Whoa! This thing looks beautiful.
Yeah.
Wow.
Talk about going from
great job, Eric. See, this is almost one of those things that you almost don't need Ichimoku Master for, because it's just going up and up and up. But that being said, one of the nice things is it lets you know when things could be running out of steam and you could be looking at staying out of it. So the thing is, as a trend, this is awesome. This is great.
This is a great one to use.
This is a great one, yeah, because it's a very trendy stock. As you take a look for that, it definitely follows those trends. And you can see how the Tankinson just follows up along with that. Now, with that, you could say that could be great if I want to get taken out there and re-enter there. If I really do want to get out and get back in, even with the re-entries, you've still got great movement and great potential, especially since it's been doing this nice move for the last year. You know, I mean, so to me, this would be something that would follow. But that being said, I would have wanted to get in on this back when it gave the signals, not when it's like really at the end. I'd be looking for it to give me some kind of re-entry to get back in, because this is something where you should have already been in for a long time, and it's telling you should have been in for a long time.
And Eric, I hope you've been in it for a long time.
So
all right. I think we're done.
Okay.
We're just out of time.
Yeah.
Is really what it comes down to. So
yeah, you can keep doing this all day.
yeah, exactly. Robert, thanks for coming in.
Hey, thank you so much for having me. It's been a lot of fun, and
I enjoy it when Robert comes in the office because we get a little bit more interaction than we normally do. So you're welcome to stick around. You're welcome. I know you've probably got something to get to.
That's fine. Yeah, go ahead and you know. Great to have everyone aboard. I'm glad you could join the webinar, and thanks for having me here.
Yeah. All right. Cool. Thanks, Robert.
You're welcome.
Get out of my office.
I'm getting out.
John asked the question. We're in Salt Lake City, Utah. So, and it is beautiful outside right now. So, in any case, I hope that was helpful for you guys. I knew nothing about Ichimoku Master until this product came along, and then kind of learned about it. It's a really, really cool methodology. Let's go back in here. Ichimoku Sanju obviously developed it back in the 30s, I believe was the right thing. I'd have to look at my presenter notes, but it's a time-tested system, and people are still teaching courses on it to this very day. And I love the way that it puts it together. I mean, just to kind of go through what we had kind of talked about, you know, we went from 500 stocks to 2 that we actually looked at, and very quickly we were able to get to the one we wanted to look at. And I think just the ability to go through and just find the stocks you're interested in and really shortlist them is one of the best parts of that for MetaStock. So this particular add-on, it can seem, quite honestly, a little bit overwhelming, but it does such a good job of laying everything out for you, and explaining them to you in English. And it's been an extremely popular product. Robert did such a good job in designing it. John says it's a cloudy and cool in San Fran, and I guess he's American of Turkey. So at San Francisco, I used to live in Boulder Creek, and I used to work in Los Gatos, which is by San Jose. I love San Francisco. It's probably one of my favorite cities. Marin County. Okay, cool. All right, that add-on is part of the MetaStock Traders Toolbox. So all 4 of those add-ons that we talked about today, Steve Bigelow, Joe Duffy, all the education with both of those products, the Adrian Mance product, the Ichimoku Master, all of that's going to be included, as well as 2 years of technical analysis of stocks and commodities, 3 months access to MetaStock Real-Time, 3 months access to MetaStock Zenith, the Unleash the Power of MetaStock Bootcamp, the course that I'll be giving in about a week, Thursday to be specific, and then of course the one-on-one white glove support call where they're going to actually go and help you make sure everything's configured. Normally all of that would cost $25.96 if you bought it off separately. Here at the summit, The pricing on it is $15.96. And I forgot to mention, if you already have MetaStock, thank you for that. If you want to pick up just the Ichimoku Master, you can buy it here. It's normally only $399. Again, that's a one-time cost. Our products are very, very affordable, especially for what they do. $299 is the summit price, and we do offer it, again, with a 30-day money-back guarantee. So either one of those, 800-882-3040, or you can chat online with us at metastock.com/saleschat. We've got one more talk to go. It's mine, and so it's okay that we're running 12 minutes behind. I'm not going to be upset. In any case, yeah, 800-882-3040 at metastock.com/saleschat. Another thank you to our sponsor, Stocks and Commodities Magazine. I'm sure all 300, all of you have signed up for the Stocks and Commodities Magazine by now, and because it's a complimentary copy. In any case, I do want to spend a little bit of time